What's up, guys? I think I'm live. Pretty sure we are good to go here. Hope you guys are all doing well. And I'm starting a little later than I wanted. Not feeling the greatest, so kind of got off to a slow start, but I made it. Hard to call in sick when this is what I'm doing. So I'm here and I'm ready to take a look at the market. Now, interesting thing this week is FOMC is going on, and it should be quite the volatile day. So I'm excited to trade on that day, and I'm gonna do that all live. So that day I'll be sure to be starting the stream probably a couple minutes before 11, maybe 10 minutes before or so. And we'll go from there. But it should be exciting, and we'll just watch Jerome Powell, see what he has to say, and you know, I don't know what will happen, but there are some predictions. So people were thinking, somewhere 50 seemed to be a pretty high guess. I think it was 50%. Half the people were thinking 25, and then the other half were 50. But as of this morning, the Senate actually sent a letter over, which is pretty interesting. So, we write today to urge the Federal Reserve to cut the federal funds rate currently at a two-decade high of 5.3% by 75 basis points at the Federal Open Market Committee, FOMC, on September 17th. Given the Fed's confidence in inflation and moving toward its target of 2% and data indicating slower job growth, now is the time to swiftly move forward with rate cuts. So, I don't know. It'll be interesting to see. I kind of makes sense to me just to get it over, not over, but just to really get that ball rolling. Start off with something, a little bit higher, rather than just slowly inching in toward it with a 25 or whatever it might be. But everyone has different preferences. I obviously am not an expert on it, so we'll leave that to the pros. But I'm just here to watch the trends and ride that wave. But historically, what happens is you'll see the market start to pull back. So that's why you've been hearing so much about a recession or just a crash in the market. And I made a video about the yield curve. I think it came out on Saturday morning. But where I just explained, the normal yield curve versus the inverted curve and what we're looking at and kind of how that affects everything. So it is pretty interesting. We are at some historical numbers, so I definitely encourage you to take a look at that, or take the time to look into it further yourself, whether it's Investopedia or other videos. Obviously there's a wealth of free information out there online. So another reason why I love making YouTube videos is like, there's so many places where you can pay to get information, and there's so many people withholding information. But really, if you take the time and dive through, you can get everything that you need to learn for free. But some people are just a little bit more greedy with their information, which I do understand to a point. You don't want to spend a bunch of your own time and money and then just make things, I guess, easier for people. But I don't know. At the same time, it's hard for me to understand that because I just want to help people. And it's not like, the more people learn how to trade, the less shares there's going to be out there for us. It's just going to, make it a better market. And the more people that learn how to invest, the better off they'll be. So, I just want everyone to be happy and healthy as they, move on in life. Whether you're watching this and you're 20 or you're 60, it doesn't matter. I know my audience is pretty wide range. The one thing it is mainly, it's definitely males. I don't know if there's females watching at all. But I think it's like 95% males, which is okay. I totally understand that. But it's just kind of funny when you look at the numbers. You're like, oh wow, all right, now I know. So what's up to all the bros out there? Because I know it's mostly you guys around the world too. It's pretty incredible. Some of you guys from completely different countries where I don't know if you're watching with subtitles, or if you speak English, but yeah, it's pretty crazy. So right now the market is chopping around, which is kind of what I would anticipated for the day. And as you can see, it started off pretty aggressive and volatile. So if you caught some moves on there, good job. A nice pop and then a quick sell off. Risky, but definitely high risk, high reward situations right there. And I know shout out to Marlon. He really capitalized this morning on that. I think it was probably on this first pop, because he was, done for the day early, which is ultimately the goal, right? Get done as soon as you can so you can go on with your day. And, if you have kids, take them to school or whatever it might be, go to the gym. Life is too short to spend 8 hours a day building someone else's dream up. So, you got to start somewhere, whether it's a $10 account or a $20 account. Anyone can start anywhere. There's all kinds of ways to earn small amounts of money online that you could eventually put in. So if you're watching this with no money, let that motivate you. Get out there, get $20 to put in your account, try it out. And if you don't know how to trade at all, try with a paper account. Webull has um, a great platform for that. There are pros and cons to using a paper account. There's no emotions involved. And also it doesn't execute quite the same, so you can kind of get lucky a little bit here and there um, with the executions because it's just simulation. So you can't fully rely on it. But if you're coming from ground zero and you just don't know what you're doing at all, it's a great way to develop a strategy and kind of figure out what's going on. To kind of take the fear out of that initial investment. Like so many people are scared of. Every time I meet people, in real life that don't know anything about trading, they're always so scared. And especially when you hear options, it frightens people. But as long as you are smart about it, have an entry and exit plan, it's really not that risky. Of course, there's always the chance of a reversal or whatever the case might be, but you learn to manage risk and you learn what kind of scenarios are higher risk than others, like FOMC, for example. That's going to be pretty volatile. So, should be, again, interesting, like I said, with that letter going out. That's more aggressive, absolutely. And I would like to pull up some other possible charts on that. I know I saw a graph earlier where you could see every time we hit these rates historically, there's, a big pullback. But I'm scared to scroll through Twitter, to be honest with you guys. So let's take a chance here. Uh, let's see what this has. What is this? The bonds yield. So yeah, bonds yield looking for a pullback. I mean, this could be great, I believe, for people who don't own homes and eventually want to get in that market. I know that's a bond market, but overall, I believe this should kind of help the real estate market. I don't know. We shall see. And it's extremely expensive right now. So if we can get those interest rates down, naturally that is going to help people be able to afford a cheaper loan. Now, hopefully, we don't end up in a situation where people are getting huge piles of money for free, or they can end up buying a house, and then next thing you know, they can't afford the house because they were given a huge down payment, that got them in the door, which is, if you don't know anything about the big crash in '08, it was basically people were getting mortgage loans for dirt cheap that couldn't afford them, and next thing you know, it wasn't a fixed mortgage loan, and it was a balloon. I believe that's, man, I haven't looked at those things in a while, but I believe it's a balloon mortgage. Maybe I should Google that. But next thing their monthly payment skyrockets. They can't afford it, and all these people are foreclosing on houses, and then next thing you know, the market crashes, which you know, is quite a shame, and it was a pretty interesting time to be alive. So just hanging out here. I also wanted to take a look at futures. Maybe take a couple practice trades on here with you guys. Now, right now, I just kind of have the split because usually I'm watching everything at once and I have this on a different screen. But for the sake of screen space and only having one, for now, I'll just kind of go back and forth. But as we can see, SPY is holding firm at resistance here around 562.80. High of day 562.92. And again, the all-time high being 565.16. So we're not far away from it. But the market is just hitting resistance as we inch on closer to those all-time highs while inching closer to the FOMC meeting for the week. So I definitely expect some volatility. It's either going to break resistance up here and rock it out, or it's going to pull back and maybe we'll see 555. Looking over here on the 2-hour chart, you can get an idea of some of those levels to come. I'll expand it a little bit. Actually, let's just zoom all the way out. Let's just analyze this real quick. Now, down here in the bottom left, you can see I still have the 1-minute chart up so we can watch the trend. And Maybe I will buy this dip. Ooh, that dipped fast. Popped. I was trying to buy the dip over here with ES. Now I have MES on this side. I don't know why. It just didn't update. I probably went too quick. So ES on both sides here. And if you don't know much about futures, this is SPY right here. This is going to be the same pattern that you'll see. So we're looking at the 15-minute chart here on ES. And then if you look at the 15-minute chart on SPY, it's going to look the same. There's tiny little differences when you're watching very closely, but overall, it's going to be the same. Now, SPY is wanting to break out. It will be interesting if that happens. There's only 9 minutes left though, so it is unlikely, but there's only 25 cents to go to break that high of day from Friday. So we are so close to it. Wrong chart. There it goes, man. No, I don't want to chase. That's the reason I'm not just buying into this futures right now. And if we are so close to the end of the day, I really don't prefer. I would like to start streaming earlier on in the day, like in the market open. That way I don't end up in this situation because you have so much more time. I like the price action typically better. And if you do end up with a red trade, out the gates, well, then you have the rest of the day to strategically, get your way out of that position rather than, jumping at the end of the day. Next thing you know, you're like, damn, I traded for 10 minutes and I have a red day and now I have to wait till tomorrow. So it's a little more frustrating when you do that. Yeah, see, I'm glad I didn't just chase it. This is exactly why. You got to be patient, watch for those trends to play out, and because there's only 8 minutes left, I don't expect a whole lot to happen. But it would not be the first time if it started to rip. So let's take a look at these other charts a little closer, see what's going on a micro level. Meta today was really breaking out, looking strong. But the market wasn't quite following its lead all the way. Everything else was you know, kind of chopping around a little bit with SPY. So Meta looked like it was the clear winner of the day. Now I had Nvidia on here. I don't know where it went. I apologize. What should I replace here? I got Apple, Microsoft. Do I have Apple twice? I really need more. Meta, Google, Amazon. Which one? Any, mini, miny, mo. I'll just swap out Amazon with Nvidia for now. Nvidia. So Nvidia is kind of struggling on the day. Um, and if in on the for I don't know what I was just trying to say. On the flip side of things, there you go. If Nvidia was ripping, I bet the whole market SPY would probably be up quite a bit, and that would really help push through resistance, like we are seeing right now. So, Meta really helping out here at the end, and again, Apple looking pretty strong too. Not high a day yet, but let's zoom out a little further. And we can see, lots of room to recover here on Apple. Meta, like I said, clear breakout of the day. Google chopping around. Tesla hitting resistance too. So Microsoft also in that chop zone. This is not a case where I feel like I want to buy. There might be a little bit of room to run here in the last 5 minutes or so. Um, let's see. Man, it is looking good. Not gonna lie, it is tempting. All right, it is a practice count. Let's do it. So let's see if there's any pullback at all. I'll try to join on the bid. And I do not encourage this this behavior in a day. So we'll see what happens. Now it is windy outside. I think I just saw debris come down. That was wild. Whoa. All right. Do not clean the keyboard while you're trading. And see, I'm glad I didn't chase it. This is why. Gotta be patient. This could be a little pullback. It also could just flush out right here. But we'll see. It's so silent in here. Need some elevator music or something. Some music that doesn't get me demonetized. Ooh, is it gonna run? Let's see. We got about 5 minutes left. 5 minutes left. What's gonna happen? Let's see. Spies broke through 563. hit high day right there. Again, there's just not much time left in the day, but it is looking good. If only this happened a half hour ago, that would have been preferred. The market, let's zoom in a little bit here. See how everything's looking. Pretty froggy at the end here. But not, it's just not an ideal situation to chase, obviously. If you guys weren't aware before, do not chase. And even now, I'm so hesitant because I know there's a good chance it pulls back right here to support. End of day, 563 being a key level of resistance. And I keep clicking on the wrong one. So let's look at the hour chart here on SPY. And I'm over here using my trackpad instead of my mouse. Like a fool. Damn fool, I tell you. So man, resistance is strong. We are in that chop zone. Maybe I should draw some lines here. Draw some fresh lines. And I'm actually going to go to the 2-hour chart. Hope you guys had a great weekend. I know I had a good weekend. It was very busy. So it went a little bit quicker than I would like, that's for sure, but solid weekend. You know what? I want the 4. Give me the 4. Man, resistance is so strong here. So that move to 565 is not far away. I mean, obviously, but if you look at the chart, you can see, we break through 564. It's going to be a quick pop back to 565. I wouldn't be surprised if we do kind of struggle through 563. But once we get to 564, it's going to get explosive. And I wouldn't be surprised if we pull back a little bit tomorrow heading into FOMC. And then, come FOMC day, we come back up here. But who knows? That is just a thought. Just a minor prediction, use these lines just to guide you. There's no guarantees in the stock market. Whoa, did not mean to click there. So let's draw this line right at 564 because we hit resistance right here, 563.90. And then right here, we kind of shot up. What was that? On the 17th. So I'm going to zoom in a little bit and go over to the 17th. I can get a better idea of what was going on. Yeah, just volatile, just a big candle. So maybe. Wait a second. Is this right? Am I tripping? What just happened? Whoa. Oh, way back. Way back, you guys. I am sorry. I'm losing my mind. I might have a fever. I think I'm having a fever dream. So the 17th of August, as I was saying, I think. No, July. Jeez. 17th of July. So that's where I see those levels from. And I almost lost my train of thought here. Oh, motion sensor light. Is this spooky? It seems kind of spooky. I feel like I should tell something scary right now. Like a horror trading story. All right. There it is. There's that flush, you guys. This is why you don't chase. Just like I was saying, it's gonna flush out to support end of day. And I would have been so frustrated had I jumped in to a trade, even though it was just in a practice account. It doesn't matter, you want to treat it real. Now look at that bounce though. Bounce with it. I apologize for that. But yeah, that was some interesting volatility into hours. But you can see still on an uptrend, and it did finally break through resistance. So we'll see what happens, after hours, how it plays out, where we open up at. But I don't expect any big moves. I expect it to open somewhere between 562 and 563. I don't anticipate any big news tomorrow. I always post the the FOMC schedule. The man, I cannot think right now. The federal this thing right here, Federal Reserve schedule. I post this in the Discord. If you guys aren't in Discord, link is down below. It's free. And I've kind of flirted with the idea of doing like some sort of membership at some point, but I'll keep you guys updated when that happens, and when we get to that bridge, we'll cross it. But this is the Federal Reserve calendar, and I highly recommend everyone take a look at this. Um, you know, every Sunday or so, and just get briefed on what's gonna happen for the week, because if you're not aware, you can definitely get caught off guard. I have certainly been trading on a Wednesday, not aware of the FOMC before I even knew what it was, and then the market just starts going wild, and you're like, what? What is going on? This is what's happening. Jay Powell's what's happening. He's probably delivering some message, but yeah. So be aware of that, and I believe Friday also. Yes, the selected interest rates at 4:15. So that's later on in the day. So I think that's after hours. Well, it is after hours. So I don't know how much that'll affect. Maybe we'll get some leaks though. Once in a while that will happen. Get interest rate leaks on Twitter, and that will affect the market, or someone make a fake one. So it is good to be aware of what's going to happen, whether it comes out, during open hours or not, because those are the sorts of things that really affect the market. And yeah, so that's what I have on there. So back to futures here. Looks like I will not be making a trade on here. And again, sorry I started a little bit late. Just feeling under the weather. It just went through my whole house. And then I thought I was in the clear. And then I woke up this morning just like, oh, my throat was just raw. And so yeah, that's where I'm at now. Um but speaking of futures, I did want to take some time to look at, I can't even remember what they're called. Shout out to Marlin. Maybe I should look. I think he said Renko. Has anyone used this before? So I'm gonna change these standard over here to the same time frame. Just so I know I'm looking at the same thing. But I have never used these Renko bars before. I'm open. I am a closed bar guy. I like these lines. The candle wicks, sorry. But I have never used this. Maybe if I look at the 1 minute, it'll be a little bit more interesting. So if anyone has used this, let me know in the comments, in the chat, whether you're watching this on the replay or not. I don't know. At the mercy of YouTube's algorithm. But he said he was hearing great things about it in practice, and really liked how it was working. So this is the Renko. Renko. Now, is it just hmm. I was trying to think, is it called a Renko candle? Are these all candles? Sorry for that awkward silence, but I was just kind of thinking in my head for a second. I don't know if this is called a Kaji candle, I guess, right? Or is it just these are candles because they look like candles? And these are, what's the technical term? I don't know. I don't know. Columns, high, low. I don't use any of that. Baseline, HLC area. Area, definitely don't use that. That's something you'd see like when you download Robinhood for the first time. Might have that area, which it's not bad to look at on the eyes though, especially if it's green. Looks nice. Line with markers. Nope. So Renko, let's just Google Renko really quick. Actually. Um, Let me just pull it up down here. Gotta be safe around these parts. I hardly know how to stream as it is. Renko. It sounds like the name of a store. All right, so let's look at Investopedia. This gonna let me come on, baby. Oh, whoa. All right. Renko chart definition, what it tells you, uses and example. All right, let's learn about Renko, guys, girls, probably guys, but maybe girls. Renko chart definition. What is a Renko chart? A Renko chart is a type of chart developed by the Japanese that is built using price movement rather than both price and standardized time intervals, like most charts are. It is thought to be named after the Japanese word for bricks. Okay. Renga, since the chart looks like a series of bricks. A new brick is created when the price moves a specified price amount and each block is positioned at a 45-degree angle up or down to the right of the prior brick. An up brick is typically colored white or green, while a down brick is typically colored black or red. Interesting. I like that. Brick. So there's the Renko brick. You know, it's not a candle. I'm seeing an error here. I think I'm still good. I'm gonna keep on streaming. Whoa, ignore this. I don't know what this is. Oh my gosh. My notes almost popped up. You almost saw a puppy emoji from my daughter. All right, key takeaways. Renko charts are composed of bricks that are 45-degree angle. Yeah, just read that. Brick can be any price such as 10, 50 cents, 10 cents, 50 cents, $5, and so on. This is called the box size. Box size can also be based on the average true range. Renko charts have a time axis, but the time scale is not fixed. Some bricks may take longer to form than others, depending on how long it takes the price to move the required box size. Renko charts filter out noise and help traders to more clearly see the trend, since all movements are similar. Wow, let me restart that. Since all movements that are similar, then the box size are filtered out. Renko charts typically only use closing prices based on the chart time frame chosen. For example, if using a weekly time frame, then weekly closing prices will be used to construct the bricks. That makes sense. I do like that though. It seems like it's something that keeps things simple, which I'm 100% advocate of. You know, that's one of the what's the words? Mission statements, if you will, for the channel. You know, always trying to simplify things. I've said it time and time again, you know, people make trading sound way more complicated than it needs to be. It doesn't have to be that hard. You know, keep it simple. I think most people have heard the acronym keep it simple stupid, or KISS, whatever. You guys know what I'm saying. Keep it freaking simple, and life is so much easier. And so I constantly preach that. So hey, if this is another way to keep life simple, I'm 100% down for that. um let's see, what does a Renko chart tell you? Renko charts are designed to filter out minor price movements to make it easier for traders to focus on important trends. Now, this brings me to the 15-second chart. I've talked about this many times, man. You can get lost in the sauce. If you're too focused on that, you can get shaken out. You can get freaked out, whatever. It is not a good place to solely focus on. I use it just as another tool, just to kind of give me a heads up. If something is truly breaking through resistance, it'll just give you, you know, a quicker, it'll just let you know quicker, basically. But if that's all you're using, it's going to be very, very hard to trade, and it's going to be stressful. So I recommend only using it, you know, as another chart. Don't use it solely as the only chart you're looking at. And also make sure you're, you know, looking at all those 15-hour daily charts and marking out those support and resistance lines, and then you know, using all of that information to make the best trades that you can. um, while this makes trends much easier to spot, the downside is that some price information is lost due to simple brick construction of Renko charts. It makes sense, you know. It just kind of I keep going back to the 15-second chart, but it's that the 15-second chart is giving you markets are closed. The 15-second chart is giving you more information, right? It's giving you uh what, 4 times the information as the 1-minute chart. So that's all that's really happening there. Is it's giving you really that the micro trends within the trend, and sometimes that can be beneficial. But again, don't get lost in the sauce. The first step in building a Renko chart is selecting a box size that represents the magnitude of price movement. One second, I need to take a drink or something. Okay, we are good. Where was I? I don't know. Um, right. For example, a stock may have a 25-cent box size, or a currency may have a 50 pip size. Pip. I almost said pib. 50 pip size. So like in futures. Let's click on pip. What are pips in Forex trading and what is their value? Oh, I think it is specifically for Forex. Sorry. I said futures, but I'm thinking ticks. Used in Forex should not be confused with basis points, which are used in interest rates. Yeah, a pip is 100th of a percent. So Forex is something I do not know much about, clearly, and it's something I look forward to learning more. So hopefully we can dive into that more on the channel at some point. But for now, let's get back to not that. Maybe I just need to go back. Not the yield curve. All right. A Renko chart is then constructed by placing a brick in the next column once the price has surpassed the top or bottom of the previous brick by the box size amount. For example, assume a stock is trading at $10 and has a 25-cent box size. If the price moves up to $10.25, a new brick will be drawn. The brick will only be drawn once the price closes at $10.25 or higher. If the price only reaches $10.24, a new brick will be not drawn. Once a brick is not drawn, it is not deleted. Oh, once a brick is drawn, it is not deleted. If the price rises to 10.50 or higher and closes there, another brick will be drawn. Okay, I like that. You know, it really cuts out the noise, and it cuts out a lot of that choppy little price action that you could see. So that's nice. Definitely look forward to really trying this out tomorrow and giving it the old college try. Renko bricks are not drawn beside each other. Therefore, if the stock drops back to 10.25, a down brick is not drawn next to the prior up box. The price would have to drop to $10 in order for a down brick to appear below the prior up brick. So I'm going to read that again just because I'm stupid. Renko bricks are not drawn beside each other. Therefore, if the stock drops back to 10.25, a down brick is not drawn next to the prior up box. The price would have to drop to 10 in order for a down brick to appear below the prior up brick. Okay, so they just don't draw them right next to each other because then they would probably look connected. So in order to avoid that, this is what happens. So you know, it kind of looks like a little gap down. Instead of it being drawn right next to it, it is below it. While a fixed box size is common, average true range is also used. ATR is a measure of volatility and therefore it fluctuates over time. Renko charts based on ATR will use the fluctuating ATR value as the box size. Let's just take a look at ATR so we can all recap on this. Measure volatility with average true range. So shout out to maybe I should be saying these names and giving some shout outs. I don't know, but I'm just gonna highlight them. And yeah. So J. Wells Wilder is one of the most innovative minds in the field of technology analysis. In 1978, he introduced the world to the indicators known as true range and average true range as measures of volatility. Although they are used less frequently than standard indicators by many technicians, these tools can help a technician enter and exit trades and should be looked at by all systems traders as a way to help increase profitability. Couldn't agree more. More tools in your belt, the more success you'll see. Absolutely. What is the average true range? A stock's range is the difference between the high and low prices on any given day. It reveals information about how volatile a stock is. Large ranges indicate how volatility and small ranges indicate low volatility. The range is measured the same way for options and commodities, high minus low, as they are for stocks. So, you know, this is stuff I definitely already know. And so I'm sure many of you guys watching it already know, but hopefully it's a good recap and hopefully, you know, some of you are learning something new. One difference between stocks and commodity markets is that the major futures exchanges attempts to prevent extremely erratic price moves by putting a ceiling on the amount that a market can move in a single day. This is known as a lock limit and represents the maximum change in a commodity's price for one day. During the 70s, as inflation reached unprecedented levels, grains, pork bellies, and other commodities frequently experienced limit moves. On these days, bull market would open, limit up, and no further trading would occur. The range proved to be an inadequate measure of volatility, given the limit moves and daily range indicated there was extremely low volatility in markets that were actually more volatile than they'd ever seen. So I'm not going to read this whole thing. I'm going to put myself to sleep reading out loud here. Um, but hopefully, again, this is helpful for you guys. And you can obviously come here and read more into it. But back to what we are looking at here. Back to the Renko. Let's see. Renko charts show a time axis, but the time intervals are not fixed. One brick could take a month to form. Could take a month. I sound foreign. One brick could take months to form, while several bricks may form within a day. This varies from candlestick or bar charts, where a new candle slash bar forms at specific time intervals. Interesting, interesting. One brick could take months to form. Wow. Sounds like it's forming a diamond. Increasing or decreasing the box size will affect the smoothness of the chart. That makes sense. It's kind of like if you guys know anything about moving averages and things like that, you know. As you adjust things, it's going to change the way it measures, obviously. Um, Increasing or decreasing the box size will affect this. I just read that. Renko charts are effective in identifying support and resistance levels since there's a lot less noise than a candlestick chart. When a strong trend forms, Renko traders may be able to ride that trend for a long time before even one brick in the opposite direction forms. Ooh, I like that. You guys know I'm all about riding that wave. This is speaking my language here. Renko traders. Sounds like a group. Like it would be a Twitter account. Trading signals are typically generated when the direction of the trend changes and the bricks alternate colors. For example, a trader might sell the asset when a red box appears after a series of climbing white boxes. Similarly, if the overall trend is up, lots of white slash green boxes, a trader may enter a long position when a white brick occurs after one or two red boxes, a pullback. Okay. So I'm going to read that one more time. Really drill this in. Trading signals are typically generated when the direction of the trend changes and the bricks alternate colors. For example, a trader might sell the asset when a red box appears after a series of climbing white boxes. Similarly, if the overall trend is up, lots of white slash green boxes, a trade may enter a long position when a white brick occurs after one or two red boxes. A pullback. Okay. Got it. Example of how to use Renko charts. So hopefully you guys can see that. Maybe I should zoom. Maybe I should have done that a long time ago. Man, I apologize. That's probably way better for you guys. Holy cow. Example of how to use Renko charts. Renko chart with a $2 box size. So you can adjust the box size, apparently. You know, we're all learning this together. From 10 cents, I believe. Actually, let's recap here. I feel like it was at the top. Yeah. Such as 10, it may be any price size, such as, so I'm assuming 10 cents is the lowest. I'm thinking there's no 5 cents, but hey, correct me if I'm wrong, please. Example of how to use Renko charts. $2 box size. So strong uptrend, buying opportunity after short-term pullback. So I wonder what this would have looked like compared to the SPY 1 minute chart. Or maybe the 2 minute chart. Maybe I don't know, maybe the 1 minute box size is similar to a 1 minute chart. I don't know. Just thinking out loud here. Um, Scrolling down. Well, maybe I should finish covering this. So strong downtrend, shorting opportunity after short-term pullback, and it's pretty self-explanatory. You see the red, see a little pop, short the pop. Buy the dip, short the pop. The chart shows a strong uptrend in a stock with a $2 box size. Boxes are drawn based on closing prices, so highs and lows, as well as moves smaller than $2, are ignored. There is a brief pullback marked by a red box, but then the green boxes emerge again. Given the strong uptrend, this could be used as an opportunity to enter long. Consider an exit and when another red down box forms. So yeah, okay. After the uptrend, a strong downtrend forms. A similar tactic could be used to enter a short. Wait for a pullback marked by the green up box. When a red down brick forms, enter a short position as the price could be heading lower. Again, in alignment with the longer term downtrend, exit when up brick occurs. These are simple guidelines. Some traders may wish to see 2 or more bricks in a particular direction before deciding to enter or exit. Yeah. How aggressive do you want to be? Higher risk, higher reward, right? The difference between Renko charts and Heikin Ashi charts. Heikin Ashi, hopefully I'm saying that right, I feel like I am. Heikin Ashi charts, also developed in Japan, can have a similar look to Renko charts in that both show sustained periods of up or down boxes that highlight the trend. While Renko charts used a fixed box amount, Heikin-Ashi charts are taking an average of the open, high, low, and close for the current and prior time period. Therefore, the size of each box or candle is different size and reflects the average price. Heikin-Ashi charts are useful for highlighting trends in the same way that Renko charts are. Okay. So I have played around with the Heikin-Ashi. I haven't studied them at all, but I have turned them on, I should say. That's basically the extent of what I've done, just to take a look at them. But I don't remember ever even taking a look at the Renko. Could be wrong, you know. Definitely forgotten a lot over time after 10,000 plus hours of this, but Renko charts don't show as much detail as candlestick or bar charts given their lack of reliance on time. So, you know, like I was saying, it's like the 15-second compared to the 1 minute. There's just way more information in there. You'll see a trend form within the 1 minute candle rather than just looking at the 1 minute candle. Um, a stock that has been ranging for a long period of time may be represented with a single box, which doesn't convey everything that went on during that time. This may be beneficial for some traders, but not for others. So this might work good alongside with candles, just so you can, you know, you'll see that kind of scenario play out, and then maybe take a look at the SPY chart and to see really the details of what's going on there. You know, sounds like a good strategy. Highs and lows are also ignored. Only closing prices are used. This leaves out a lot of price data since high and low prices can vary greatly from closing prices. Absolutely. The use of only closing prices will reduce the amount of noise, but it is also the means the price could break significantly before a new box forms and alerts the trader. It is no longer power hour, you guys. This is after hours, but I don't think I got a little stinger for that. Thanks for being here. I appreciate you guys. Where were we? Uh, okay. The use of only closing prices will reduce the amount of noise, but it also means the price could break significantly before a new box forms and alerts the trader. By then, it could be too late to get out with a manageable loss. Therefore, when using Renko charts, traders often still use stop loss orders at fixed prices and won't rely solely on Renko signals. Yeah, I wouldn't rely solely on any one signal or indicator. It's definitely good to keep your eye on multiple of them. You know, don't overcomplicate things. Keep it simple. But just like this is saying right here, you could definitely get lost in the sauce looking at this, just keeping it too simple. Next thing you know, it's breaking support before you even realize it, just because you're waiting for that brick to form or what's going on with it. So good to know. Since this type of chart was designed to follow the general price trend of an asset, there can often be false signals where the color of the brick changes too early, producing a whipsaw effect. This is why it's important to use Renko charts in conjunction with other forms of technical analysis. And that's how I will certainly be using it. I will not be solo dog in Renko, and this just confirms, what I was already gonna do. Um, Man, getting caught in that whipsaw is there's nothing more frustrating. So getting caught in the chop, the whipsaw, the false signals, man, getting stopped out early or buying the top, very frustrating. So use this in conjunction. This is based off of Investopedia. That's their recommendation, not mine. Not a financial advisor here. Just trying to share my knowledge and to gain new knowledge with you guys. How do you set up a Renko chart on Thinkorswim? Thinkorswim is a popular brokerage and trading app from Charles Schwab. I think we all know that. Although candlestick charts, I'm not even going to read that. If you guys are on Thinkorswim and want to use it, then, go for it. TradingView is actually the platform. Well, this is Webull. Actually, I don't know if, let's see if Webull has it. Um, I don't think so. Interesting. So yeah, if you want to use it, you're not going to be able to use this on Webull. It doesn't look like, not yet at least. At least not on the MacBook platform. I'll check on the desktop when I get inside, and I'll also check on the Windows, the web version, I should say. But yeah, I don't see it. RVOL, ROC, PPO, OPV, MACD. Middle name is Mac. Fun fact. All right, back to Renko. How do you set the box size of Renko? Box size for a Renko chart is determined in part by the trader's time horizon, risk tolerance, and trading goals. Larger box sizes are more appropriate for long-term trading, but they also incur higher risk because they do not reflect smaller price movements that can accumulate over time. So, just like with candles, whether you're looking at the 1 minute or the 1 hour, there's a lot more information you're gonna see on a 1 minute chart than you would see on the hour. If you're looking at the hour, there's a whole lot of guesses and mystery, I guess. Not guesses. Whole lot of mystery going on there in that filled out candle. But depending on your time frame, and that might not matter a whole lot what's going on in there. If you're holding something that doesn't expire for a month or two, the hour chart probably works pretty good for you. Um, I think that's it. So that is the Renko chart. Let's go back to Top Step and take a look here. So Top Step uses the TradingView platform, and so that's why this is an option on here. So um now I just need to figure out how to use this. Still getting used to this whole platform. To be honest with you guys, I've kept my strategy so simple to pass the combine that I didn't play around with a whole lot of anything. I mostly, just watch SPY and use that information and then just would enter my trades in future. So I haven't spent a whole lot of time getting too familiar with this platform. But that's definitely something I'll do online or on live, I should say. And we can learn some things together. So for example, let's see. This Renko. Oh wait. Oh my gosh. I am dumb. I was looking at indicators. Holy crap. Okay. Is Renko in here? Uh well, it just hit me. I was like, I'm not even looking at the same thing. So there's a Heikin-Ashi, colored bar. I don't see it on here. Line. Um, yeah, I mean, this is the Heikin-Ashi, which looks similar to a line, honestly, or to a candle, I should say. Open, close. I don't know. I haven't seen anyone use a hollow candle. When I first started trading, I think I might have played around with it for a minute, but I just prefer the old solid candles. So I will use the Renko over here on this screen and learn how to do it on there since it's not available on Webull, and that should be fun. So I'm gonna keep this side with the standard candles. What's going on here? Go away. Favorite drawing tools. What's going on? I don't even know what time is it here. 1:30. Oh, I've been going for a minute, hot minute. I wasn't expecting to go this long, so hopefully you guys enjoyed the stream. I'm probably gonna just wrap it up here. And try to get some rest for the day. I also gotta go get the kids from school and whatnot. So always busy, always trying to get rest, but here I am, you guys. I was like, it didn't work. Trying not to yawn. But thank you guys so much for coming by today. I appreciate it. Tomorrow we are going to do some trading with the Renko and see how that goes. And then hopefully I can get in here a little bit earlier, at least right at the start of 12, and we could try to do some live options trading too. But either way, it's nice just to hang out, do some market talk with you guys. And today it was nice learning about Renko. Thank you, Marlon, for the recommendation. And yeah, that's it. I don't have anything else to say. Sorry, my voice might be a little bit rough today. Maybe it's not. I don't know. But I hope you guys are staying happy and healthy, and I will see you tomorrow.